Hi everyone, welcome for what is the third webinar of today, but I know some of you are coming along for the first time. We're going to have a look at the markets, but in particular at some stocks and what criteria that we can look at for day trading stocks. But before we do, as always, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Right, very quickly, as always, we are going to be looking at charts through the prism of volume price analysis. This is this intimate relationship between price action and volume. It's all explained in the books that are on Amazon. This is the one that kicked it all off. This is where you will find the basic concepts of this particular methodology. There's also a companion book which gives you, there's over 200 worked examples based on stocks, by the way. This is, in this book you will find examples of stocks from the indices, commodities. There is also a Forex version as well, but I know some of you have seen this little schematic before. The methodology that we have down here, volume, price, we use candles and candle patterns and support and resistance. And we look at support and resistance, we look at price-based support and resistance, and we look at volume-based support and resistance. And once you really get to grips with this foundation, if you like, then on top of that, we add in we have our own proprietary indicators, but you may use, which I know some of you already have, you've invested in them, you come along, and you can combine them with we call them secondary tools, but they're not second best. They're secondary to the primary tools that we call as part of volume price analysis. And secondary tools as proprietary, Fibonacci, we use Camarilla, Elliott Wave, etc., etc. So everything really is based on this very solid foundation. Right, stocks. Let me just take that down. Now, what I've actually got up here today, this is from Tradestation, which I think you should all be able to see a little bit more clearly than you have been recently. We've been talking about the first thing about when you want to day trade a stock is the first thing is actually you've got to filter, you've got to select it, and as a trader you've got to decide, are you just going to just take an opportunity, whatever. Find one to trade and then trade it, or are you going to have you're going to get to know a little basket of stocks? But you've all got to start somewhere. In Forex, it's a little bit easier. As I said last week, we have basically 28 pairs to choose from, so it does make life a lot easier. Now, last week, by coincidence, what we looked at is one metric that you can possibly use. There are lots of metrics that you can use for shorting stocks, and as I said, with every session I want to sort of go maybe look at a one or two. And last week we looked at the principle of finding the stocks that are heavily shorted, because when stocks are heavily shorted, you have something called a short squeeze. And normally that happens because as I said, it was quite prescient last week, because obviously we had all the hoo-ha around GameStop. And that was where, if you like, a huge cohort of independent traders, retail traders, got together, as it were, and decided that they would use this strategy, this tactic, and the rest is history. But looking at the most shorted stocks for a potential short squeeze is not, it isn't something that suddenly come out of the blue. It is a well-recognized tactic, and in fact, it's used by the hedge funds themselves. Shorting stocks in quantity is a very expensive business, and I won't go into it now, but believe me, and you are talking some very big numbers. Now, why stocks are shorted, it could be a technical reason, it could be a fundamental reason. I think the reason with GameStop was basically it has an outdated business model, and the funds had decided that it wasn't probably long for this world. Well, whatever the reasons are, let's just set them aside. As a criteria, that is one that is a perfectly valid one, and it just so got all wrapped up with everything else that went on with it last week. And we looked at this. This is one of the websites I've come. It's called highshortinterest.com. And what you would do if this is what you're interested in looking at is looking at these. You would upload them onto your charts and just see, is there going to be a potential for a short squeeze, or is that short squeeze already in process? And by that I mean the short squeeze happens, which has happened on GameStop. It has absolutely rocketed. What then happens after a short squeeze? Well, the price then, you may be looking for that reversal. So that was one we looked at last week. Now today I want to look at something different, and this is another site that I recently came across, where basically it's called stockbeep.com. And one of the reasons I like this site is because it has a lot of volume metrics on it. I've only recently sort of started to get to grips with it, but I am going to be using it more and more, and sort of looking at metrics such as relative volume, unusual volume, and everything volume related, as it were. And certainly we'll be looking at that moving forward. Now, getting back to metrics for picking a potential stock that is going to move, because that's what you want to do on a daily basis. One of the metrics you can use is actually a stock that's come to a new high. Now, I was looking at this before the cash open, and in fact the stock that caught my eye that was on there was Snap. And that's the charts. That's the stock I've actually put into a Tradestation. It reached an all-time high, and actually it really we had some lovely sort of VPA lessons on it, and also some a really nice move. So what I've got here, I've got a 60-minute, which is like my benchmark. I've actually got the 3-minute and the 10-minute. With Tradestation and both Ninja, you can obviously take these right down to seconds, tick charts, Renko charts, really fast charts. But for myself, I just wanted to stick to 3, 10, and 60, and obviously look at the daily chart just for some overall context. So I know already that Snap is at an all-time high, and what I'm talking about Snap, these are general principles, and you would apply this to anything, not just this particular stock, in any stock that is at the all-time high. So let's look at basically what the 60-minute chart looked like before today. And what we had here, we've had in yesterday's session, we've had a whole series of candles. We've had moving higher, falling back. But basically, although this didn't actually trigger a volatility candle because it was within the range of for this particular stock, we did have a lot of trading inside the range of this. This is the widest range of the day. What's interesting, it also was above two key, it was above the R4, which is what here, which is, as I said, price-based support and resistance based on Camarilla. And the nice thing about the Camarilla indicator that we have developed is that on all the time frames from the hour up to and including the day, these levels are in play for the rest of the week. So you don't have to worry about trying to calculate, well, what are the key levels for the rest of the week? They're there. The indicator tells you on the faster time frames, an hour and below, they are refreshed every day. And what you do with support and resistance is the way you interpret it. They will give you those, as I said earlier, these pinch points on the chart where you are possibly going to get a reversal, possibly going to get a pause and a congestion. This is on the Camarilla, and the two key levels are the R3, as the third and the fourth level. So it's the R3 and R4, and its equivalent, the S3 and the S4. But there are actually 6 levels that are calculated. So the expectation is this has reached an all-time high. But you also have to bear in mind what Jesse said, Jesse Livermore said, nothing is ever too high to buy, nothing is ever too low to sell. And goodness gracious, haven't we seen that with stocks over the last few years, certainly in the tech sector. And this time last year, as I mentioned, Tesla was the most shorted stock in the market. And look where it is now. This is in the S&P, and it's absolutely, you know, taken off, as it were. So what happened then? It did actually, as I said, it did actually move higher. This was at the open, but it immediately fell back. Now, in this wide candle here, we could say, as I'm saying, this is day trading on the faster time frame. This is just the context of this price action. So it did go up and then came back down again. But so if we move to the 3-minute chart to see, if you like, an expansion of the price action that we have just seen. What did we have? Well, we had all the usual, you know, crazy volatility that we get at the open. We also had a gap up, as we can see here, no volatility, but the next one was volatility, more volatility, you know, really just racking about, you know, racking backwards and forwards. You say, well, you know, what do I do at this point? Now, you wait until all this dies down, all this whipsawing dies down, and then you start to look at what is the price action doing relative to the volume underneath, because this is really the key as to whether because this is an all-time high, maybe traders think, well, you know, it's going to go to the moon. And don't forget, you also have to read this against what is the index doing. This is in the NYSE, and you say, well, you know, is it a risk on day, is it a risk off day? So individual stocks, you know, they will tend to follow what the general market sentiment is. So once you have this initial calming down, the key then is which of these volatility candles is the point at which this is going to calm down. The price action is going to retreat to within the spread of these candles, and we are possibly going to get you know, half decent move. And as I said, if we thought this was going to go higher. Oh, and by the way, let me just move this out of the way. What did I say about the R3 and the R4? It didn't go through the R4 here, but it suddenly paused at this third level of the Camarilla level, and so it's already at this key level. What we want is, well, is this going to go higher? Because we know it's going to, if it is going to go higher, it's going to go here to here. So what is the volume under the up candles? Well, we have a very big up candle here, a volatility candle as well, but the volume is so-so. The next candle is even more interesting because the range of the candle is a fraction of that one, and look at that, there's no volume under there. Volume also dies down on the down candle, but this candle is quite interesting because there's a huge wick to the bottom of the candle, no volume underneath it. This up candle is not going anywhere, and so on and so on. So if this was going to go higher, this is the open of the session. You know, the biggest concentration of volume in the physical markets tends to be at the open and the close, and then you get a lull in the middle. People go to lunch and what have you. So looking at this, what has happened and what have you, given that this is at an all-time high, and you know, when things are at an all-time high, it's a kind of natural reaction, but for traders, I think they're going to short it. This is when we would look as a potential short once it goes through the R3, and then the next thing is, well, where is it going to next? And this is where our volume-based support and resistance comes in with the volume point of control. The VPOC, or the volume point of control, is volume and price over time. Where the VPOC itself sits, which is this yellow hatch line, this is where we have the deepest concentration of volume over time. It's where the price has remained over a period of time. It's where it's almost as if the market is deciding, you know, it's happy to transact within this range, as it were. So once it gets past the R3, we know it's going to go lower because, you know, the volume on the up candles is there's no justification, if you like. What volume does, it justifies whether the you know, the price action, as it were. So you actually have a really nice little trade to the downside. Where is it going to stop? Well, we know where it's going to stop, because the VPOC also acts, as I said, as volume based support and resistance. And in fact, we also have a further support line here based on accumulation and distribution. It does actually go further before we do get some buying coming in. We've got the wick to this candle. We've got some decent buying. This is a very interesting candle. It's not a hammer candle, because the price action would have to close way up there. But if you look at the volume underneath it, and you know, it's a reasonably you know, it's a reasonably deep wick. That is, you know, it's had the move down. Now it's looking to move higher. And in fact, you know, what we have to now keep an eye on is, you know, it needs the volume to support this move higher. Where's it going? It's going back to the R3. So price action, volume, support and resistance based on price and on volume. And once all the, as I said, all the whipsaw action is over at the open, you know, you can find these stocks that do behave in a more measured way. Always going to get the you know, the whipsaw, but at least you've got, as I said, a more measured movement. And you know, you don't have to always aim for the, you know, the penny stocks, the ones with a very high beta, because they are very volatile. Right. Any questions on that? Let me just have a look, see if there's any questions very quickly. Okay. Fine, I think David's done that. I'm just going to pass over to David very quickly. I think he's got something else to that he's been looking at.
Thanks, darling. Okay, just move that out of the way. You should be able to see my screen. I'm on NinjaTrader here. I'm on. I've got Apple up. Oops, move that out of the way. Need that over there. That's it. Right. I've just got Apple. I've got a whole load down here, but I just thought to focus on Apple this particular for this particular session. And obviously, what we're looking at in association with that, I'll just pull this over. This is on the trading view side. I've got, this is what the dollar is doing. Always very important to have a feel for whether the dollar is rising or falling. It's not always a direct correlation, but generally a rising dollar is not particularly beneficial towards stocks. So, you know, you just have to factor that into the information that you're pulling in. So the dollar is kind of rising. This is, it's been sort of rising, came off a pre-cash market open, and now it's sort of rising again in that sort of time frame. We're on 15-minute there. In terms of the VIX, this is what the VIX been doing. So you can see, you know, we had a little bit of a rally. That was the sort of move lower. This is on 1 minute, so this is pretty quick. Maybe change that to 5. Slow that down a little bit. There we go. Okay, so that's what we've seen at the initial open. We've had some a rise in the VIX, and now it's starting to come off a little bit. So in terms of, you know, what we're seeing at the moment in terms of the broad indices, let's just go back onto the multiple index. Here we go. We had a bit of a plunge at the start, but that is now starting to recover a little bit. You can see it up here on the 5-minute. Similar sort of picture on the NQ on 5, and a similar sort of picture on the ES on 5 as well. Move lower, some decent volume coming in. It's still not looking particularly strong, but if this rally is going to develop, going back to what I was saying earlier on, certainly from an intraday perspective, where we're going back to, well, it's pretty clear we're going back up to this level if we're going to get that far. So in about 10 points time, we're straight back into the volume point of control. We've got an absolute ton of resistance overhead here, very strong, very strong. Another one here, less strong, but you put that lot together, that is a hugely strong area of resistance for several different reasons. So in terms of recovery, both for the indices and also for stocks, you know, it looks fairly limited at the moment, and for that to break through there, it's really got to find some momentum. So we go back to our stocks page. There we go. you know, it's a recovery, but it's not particularly strong at the moment. And the recovery came about really, this is on the 30-minute time frame. You know, this was the start. You might not be able to see it here, but we had a big volatility down candle, lots of volume. Came down to, you know, we're trading pretty tight here between the R3 and the S3 here. Came down to S1 there, and it's just, you know, going to trade inside that region, or we're going to get some sort of congestion, or we might get a reversal. But at the moment, it's all looking a little bit weak for the time being. And in terms of intraday trading, let's just pull up any of these. It depends on, you know, going back to, this is 1 o'clock. This is, you know, pre-market. Very low volume, you can see here. You know, the volume is absolutely tiny in here. But of course, if you'd seen this prior to what was going on at the open, then, you know, it is tradable, it is demonstrable, but obviously at a very much lower level. But this is the pre-market from 1 o'clock onwards. We get a volatility trigger at the start, trade pretty much inside that region. Then we get a trap move to the upside at the just prior to the open, very low volume. And then off we go to the downside. Decent rally. Now we've got the reversal coming, and the trend monitor has a transition back to bullet to bearish again. And, you know, we're coming down to the volume here is falling away. So in terms of the support that is like to come into play, there's very little here in terms of support, certainly on that particular time frame. Let's go up to another one. Let's go up to the 5 here. Similar sort of picture. We're coming down to, you know, low volume regions here in terms of the stock. The price here rallied. The volume here was kind of falling away as well. So again, giving you a signal that, yeah, this rally is not particularly strong. That's on 5. Let's go up onto, I think this is 10-minute. Yeah, exactly the same sort of picture. We've had an attempt to rally, wick to the upper body, and, you know, it's not looking terribly strong. Just keeping an eye on what's going on in terms of the VIX on the other side. It's kind of flattened off at 24.74, 75. But it looks as though it's trying to sort of head down a little bit. It's down to 24.65 now, which obviously will help a recovery. We go up onto, you know, the fastest time frame. This is on a minute I've got here. Similar sort of picture. Little bit of buying coming in under this candle, decent volume under there. And remember, the volume is always distorted by this. If I pull this across and out the way, you know, it just gives you a much better picture. The volume is more demonstrable. You can see what's going on much more clearly. So we've seen a little bit of buying coming in under here, which is fine. We're starting to see that develop. But the question is, how far is this going to travel before you hit problems again? You've got a nice low volume node here at 30, so 22 to 30 should be relatively straightforward because the volume is falling away on the histogram. Once we get to 30, should move through there, but it's not very wide before we start to get into major volume congestion again ahead from 40 all the way up to 50. So as an intraday trader, you know, this is what you're looking at the whole time. Where is this stock going to take me as an intraday trader? And it applies to anything. It doesn't matter whether you're trading a currency future, whether you're trading an index, whether you're trading a spot market, whether you're trading a commodity, it doesn't matter. It's constantly looking at what is the opportunity for this particular stock or whatever it is you're trading in terms of return. In this case, am I comfortable that this stock may well go from where it is at the moment from 24 up to 50? In other words, 25 cents, is that sufficient for me to make a profit? Am I happy with that? Because I know for sure it's going to congest at this period here, at this level here. It's not going to run through there with any great speed. Occasionally it happens, but generally speaking, because of the level of congestion, because this was an important area in the past and has been considered so by the market, there is no reason to think that it will not be important in the future. And therefore, if you add that to the amount of volume that's sitting there as a result of that time that the stock has been resting in that level or congesting in that level, then it's going to cause it to pause again for those two reasons. And it's the same principle wherever we go. Let's just go back onto our 1 minute again, see where we're going. little bit of weakness come in there, the wick to the upper body, it's not a strong follow through. And in addition to that, we can now compare volume across here, because we're now talking about the same volume, the same period of the session. And if you look at this particular candle and you look at the volume associated with that candle and think, okay, well, kind of looks okay. You look back at some of these and you think, well, yeah, okay, that was based on that amount of volume. So this one, a little bit less than that one. The volume's a little bit less, perhaps a bit too low, perhaps. But anyway, if we take that one as our benchmark in this little area here, the next candle goes absolutely nowhere, and you've got exactly the same volume. So all things being equal, you would expect, if that is your benchmark in inverted commas, you would have expected this candle to travel a similar distance. In other words, go from 20 up to maybe 134.40, and it hasn't. So it's only traveled a tiny body and a wick to the upper body. In other words, what's going on here? You've got effort going in and no result. Equally, when you see that candle come in, it's the opposite, because you've got a wick to the lower body, you've got some decent volume under there, and if this had been all selling, then this would have been down here somewhere. It isn't, it's right up here. So you can infer, just by logic, there must be some buying coming into that particular candle to reverse the little downtrend here that's developing. Otherwise, this candle would have closed down here. This is just basic 101 volume price analysis, and all it comes down to at the end of the day is whether price and volume are in agreement or whether they are in disagreement, and from there stems everything else. And the only principle of the methodology that you have to accept is that the market makers dictate and manage these markets, whether you're in stocks, whether you're in the currency futures markets, where it's the big operators, whether you're in the spot market, where it is the market makers who actually make the market. If you accept that premise, then you are simply searching out the anomalies and also the confirmations of whether price and volume are in agreement or whether they are in disagreement. And when they're in disagreement, then you're looking for the analysis of that particular candle and volume relationship for the analysis of whether it is buying or selling by the market makers. And from there on, you are just walking in their footsteps, if you will. You are trying to analyze what is going on inside the market, and it's purely based on that volume price relationship. There's a lot more to it than that, but that in essence is the very simple principle on which the methodology is based. Going sideways at the moment, but as I coming back to it from an intraday trading perspective, the opportunity you're looking at right now is very limited. And I'm glad it's happened, because you have to realize that the volume point of control is it's not something like an anchor of a ship where it stays in the same place. It will actually move, and the reason it's moved is because the volume here has now exceeded the volume up here. So we are now actually trading around the volume point of control itself. Nevertheless, in terms of the opportunity that this is now presenting, you still have the same principles. You have a low volume node, which is fine, but up at this level, you have a huge amount of volume to battle through. But now we're aware of the fact that the volume point of control has actually dropped down. It is now the fulcrum of this particular market on a 1-minute chart for Apple. And once it breaks away from this region, just scroll that back out again, get rid of that big volume bar at the end there. Once it breaks away from this region, what we're looking for is obviously a rising market. We want to see it associated with rising volume, and that will give us confirmation that we are breaking away from a congestion phase. Trading from a congestion phase is a perfectly valid tactic. If you have the patience to sit through congestion, it's absolutely fine. And in a way, it's actually a great way to trade, because what it delivers when you have congestion, and I made this point this morning, is when you have a congestion phase, it will deliver those levels which then lay out, where are the opportunities, what is the point at which I'm going to jump in, where am I going to lay in my stops above and below those congestion phases. It just gives you a perfect layering of where to place them. Let's just have a look at this one. For example, let's say You were looking at this as a short opportunity. You've got breaking away from the volume point of control on this particular move lower. Where would you place your stop? Well, one good area would certainly be beyond this region here, provided that fitted your money management rules, because you've got a nice barrier of protection. You might have to set it lower. You might have to set it off this one, or perhaps even at the volume point of control or just above it. But you've actually got levels which are built out of these congestion phases, which you can then use as barriers. They are natural barriers, because never forget, when you're setting a stop loss in place, it is the market tells you where to put these things. It tells you from a technical perspective, where are the good places to place these? You want to place them behind other levels of support and resistance, which then give you that natural protection in the event of any pullback or reversal against you. This is still looking pretty weedy. It's really struggling to get higher. Can't even get through this low volume node at the moment. The trend monitor is still bright red on this particular time frame. This is on the 5-minute. Down onto the 10-minute. Same there. Just see what's going on in terms of the indices. Just the VIX is dropping. It's 24.49. So certainly in terms of the VIX, it's helping. It's trying to push the indices higher. They are recovering a little bit. Certainly the YM's recovered a little bit. I'm back up to the volume point of control. The NQ, really not so much. The ES is kind of in the middle there. But again, where is it going to go? Well, first of all, it has to get through this lot here. It's got this level to go through. It's got a very strong level here to get through, and then another level above it. Yes, we've got a low volume node here, but it's really got to battle its way back. Decent volume under this particular candle, which is positive. Relatively low volume under this one, which is positive. In other words, the selling pressure here, you can see it if you just eyeball it. You will see this anyway, just naturally, because of the fall off in volume. But if you actually look at some of these candles now, and you look at some of this one, look at that one, for example, there's a widespread down candle, but the volume actually is not as great as it should be, because if this is correct under that sort of volume, then the volume under here is even lower, which is anomalous. So you start to look at it in those contexts. Then you get long-legged doji, then you get a hammer at the bottom here, and lower volume still down there. Now we're seeing some decent volume coming in back to the upside. We've also got the VIX falling away, which is good. That's 24.37, so that's all helping. The dollar, however, is still rising. It's now up at 91.27. So we've got the dollar rising. It's come off a bit now. Beg your pardon, 91.21. It was just catching up. So the dollar has hit that level again. I'll just show you. Pull it across. You can see that without me rabbiting on. Sorry, I've got so much data coming in. Everything's a little bit sluggish. It's hit this level again. It's come off. We've got a long-legged doji. So it looks as though it's going to turn again from there. Now, if that turns down in any strong way, that's going to be good for stocks, certainly from an intraday at any rate, certainly on this sort of time frame. And that's starting to push up. That's going to be helped by the VIX as well. It's a question of how far this rally is going to take us. Let's very quickly go back onto the multiple time frames of I think I've got the YM on here. I can't remember. Yeah, I've got the YM here. Okay, this is what we're seeing right now. We're seeing this rally. We know why we're seeing it, because the dollar's weakening a little bit, the VIX is falling a little bit, and that's all helping to push the indices higher. This is on 15-second, coming out of this congestion phase. Let's go on to the slightly slower time frames. We go to the 3-minute. What are we expecting? We're expecting congestion. We've had the rally. We've come up at this level again. We're going to get congestion because we're trading at the volume point of control again. Above that, we've got a very strong level here. You might not be able to see it. This has been tested several times in the past, 7 times in fact, and that is extremely strong. So if we break through here, we're going to hit resistance here. We're going to need a chunk of volume coming in to drive that through there. Nevertheless, trend monitor's in transition. It's gone through to blue now. That's fine. So we've got blue, we've got blue here. No change down on the 5-minute, but at some point, if this starts to develop, then you will start to see that transition through to maybe a darker red. It might go to darker blue. It could even go bright blue straight away and flick over and into the bullish trend once more. Dollar's still sort of hovering about, trying to sell off a bit, and the VIX is still falling down at 24.34 now. And that's really it. Let's just have a quick wrap up on the where Apple's gone to. Probably hasn't moved a great deal. Let's just go back onto our stocks. There we are. It's trying to rally. You can see it up here on the very fast chart. It's trying to recover. How far is it going to go? Not a long way here, not a long way where, but it might be enough. This is, that might be decent for many people. This is $1 or so from this level up to 135.20, but it's got to get through here at 135 on this slightly slower time frame, and it's got to get through here on this slightly slower time frame as well. So 134.34 up to 135, 60 or 70 cents. That's probably enough for an intraday trader. Maybe, maybe not, but it's starting to transition now and turn into a bullish move, and it's dictated by the fact that the dollar is now falling, albeit not very quickly, and the VIX is also falling away down to 24.35, 24.35. And as I've just been informed by Anna that Snap stopped exactly, it's quite hard to say that, at the, where was it, R3. Yeah, there we go. So the principles of intraday trading stocks are exactly the same. You've seen it on Tradestation, you've seen it here on NinjaTrader. It's really how you go about teasing out the stocks you're going to focus on and find those opportunities. And all I would say is that obviously the most heavily traded stocks like this, will be very liquid. You'll find them even relatively liquid in terms of the pre-market. If you go for pink sheets, for example, they will be relatively liquid, but perhaps very high volatility. It's a question of choosing, what is going to give you smooth price action, good volume, and the opportunity to trade in a comfortable way across multiple timeframes. As here, this is rising nicely now. We have a little bit of decent profit in here for now, but it's a question of how far it's going to travel. Is it going to travel all the way up to 135? Well, if it does, then it's going to hit resistance for sure. And the same here, you can see on this particular time frame as well. That's it. I'm going to wrap up there because we've been going all day. Let me just point you in the direction of all the various bits and pieces. This is Anna's site. I'm sure you're familiar with it. It's annacooling.com, and you'll find all the books there on Amazon, both in Kindle and also in paperback, and all the links to the various sites as well. This is where you find all the indicators. As I'm sure you know, we're working on TradingView now. I showed the currency matrix this morning. That's been done. We're working on the array, which is a little bit tricky at the moment, but we will come up with a solution. Our developers are wonderful. And the Tradestation is now launched. That's on both Tradestation 9.5 and which is with the interactive brokers. That's Tradestation Global, and Tradestation Securities, which is driven through the Tradestation feed, which you saw on Anna's machine on her PC there. And finally, just to wrap up, this is the funded Forex program, which now has this funded element to it. It's called the Complete Forex Trading Program because that's what it is. But we now offer all our students, and it is only available to students, I'm afraid, sorry, to leverage that knowledge that they gain from our program and then apply it with no risk, trading our money, starting with a 5, 10 or 15,000 K account. And it then quadruples to 60,000, 40,000 or 20,000, and thereafter doubles right the way through to 2 million. You earn the profits, we pay you back a chunk of the profits, 50% on the higher level, and even 60% on the $2 million level as well. And interestingly, we have, since we first launched it, where it was Forex only, the 28 currency pairs, now on the second level where you move to a portfolio manager level, we've also added in the option to trade indices and also gold. So it's a broader opportunity to make money using our money. That's it. Thank you very much indeed for coming along today. I hope you enjoyed the sessions. Hope you found them useful. And we will be back at the same time next week. I'll just pull up the chat box because I tend to have it closed all the time. So apologies. Yeah, if you did get a message about the webinar, that was my fault entirely. It went out as the 1st of February when it should have been today, so apologies. You should have actually had a follow-up email about that. Apologies if you didn't get that. Monida, Ruth, what are the yellow and orange indicators? Let me just go back to the charts, drop that out of the way again. I'm guessing the yellow one is, unless you're talking about the pivots, these are the little pivots. Just pop one up, could be one of those. haven't got any orange ones. We've got the little purple ones. The yellow ones, these are pivots. This is just based on pure price action, just these 3 candles. They give an intraday perspective on short-term strength or weakness in terms of whether that particular price action is going to rally from there or when it's going to reverse from there. So you get them at the top here, or you get them at the bottom here as well. So those are the indicators. It's called the pivot, dynamic pivot indicator. Is the horizontal volume where people are currently holding, or cumulatively where people have? Yes, it's where, if you're talking about the VPOC, all this volume here is basically traders who have executed. There's a lot of pending orders in there. There are orders that have been placed and executed where traders are now looking to get out because they've been trapped in weak positions. It's just a whole array of volume that is constituted either from traders with open positions, with limit order positions, and it's just the complete package of all those orders that are sitting there. And as you can appreciate, when a price comes back up to one of these levels, there's a lot of traders who've got in at those levels. They want to get out at those levels, maybe at break even, maybe at small loss. You know, they were sitting on a loss, and then the price, it comes back to meet that level, and they execute and they get out. So it's a combination of hundreds and thousands of different orders all sitting in these regions, because as the price congests, you get a lot of people placing stops, limit orders, open orders are executed, etc., etc. So that's what it's all there for, and it just presents it in this very visual way in terms of the volume. What is the reason the funded program can only use MT4? It's just we have to, the way everything in the back end is managed automatically. We don't manage everything. You can appreciate it's a very complex operation behind the scenes, because we have to manage the risk of our money. And the simplest platform for us to do that on, and the broadest platform to do that on, was MT4. So the funded accounts are all delivered to you automatically. As soon as you sent back your details, you will be delivered an MT4 account cashed up with the amount that you've decided to go with, whether it's 5,000, 10,000 or 15,000. But we are going with, we've chosen MT4 because it's the most widely used. It's easily accessible. We take traders from all around the world on it, on our student program. It doesn't differentiate, and the way it's been constructed is in association with the back end, as I say, which is a complex operation. It's all software driven, because we have to have the metrics in place to trigger when an account hits the risk levels that we've set, and also to manage it from other perspectives as well. So apologies, you know, we'd love to have it on other platforms, but you know, it is MT4 only at the moment. But I would say with it also, we do deliver a second set of indicators. So if you have your own account with, you know, you're a student, you've got our indicators on various platforms. What we do on the funded account is also give you a second set as well to use with that particular platform. You don't have to take that up, but it's a free option that you're more than welcome to take as part of the funded program as well. So I hope that answered all the questions. Thank you so much for coming along today, and enjoy the rest of the trading session. We will be back at same time next week for the 3, and I'll try and get the dates right when I send out the GoToWebinar invites for next week. So enjoy the rest of the trading day. Thank you so much for coming along. We do appreciate it, and stay safe, and enjoy the rest of the week.